SwissBorg is the official partner of my channel where you can buy, sell, hold and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. We're going to make a real quick video. It's Friday, so I've got a toddler in the background. You probably can't see us, probably just as well. I've not done her hair this morning. So she'll be on a tablet and I'll be doing my work, which is clicking buttons and talking to you. So let's get started then. So I might as well start with my opinion on the S&P because it's no sort of difference of opinion. It's exactly the same. Looking for a rejection around here, but not looking to make a new low. I know that there's been a lot of people sharing, pictures of this, which is such that, like I say, it's the cleanest rejection you've ever seen, and one that we took part of ourselves, and saying that a new low is going to form because recession is around the corner, and historically, we've got to put in a new low before a recession, and all these other reasons and whatnot. But this time, this recession that is probably going to come, but it might not for the US. Only, right? The US might avoid it, but again, I'm not talking about that. I'm just saying this time round it's slightly different because it's about draining liquidity from the system to combat inflation, right? And inflation, believe it or not, is actually coming down, and is probably going to come down to a large extent soon this year. And we've already seen the demise of the dollar, the weakness of the dollar, the strength of other currencies like euro, even the pound, right? I strongly believe that we're going to find a breakout on this soon, and by soon I mean maybe even next week, right? We've seen the power of crypto, which is fine, powerful. We've seen the pullbacks so far, which have been pretty anemic. And again, even if they were to pull back to a large extent, we're looking at this here on a daily. We've got supports on the 10 exponential, which are just above 20,200. We've got the 21 exponential around 19,150. And these are just on the daily. If we move to a weekly, which would be even more likely to see the supports get tagged, because the money flow index and RSI have not found any divergence. They're just going from strength to strength, offering further upside generally across the board. The main support I'll be looking at is around 19,500, 19,600, right? But for the moment, we are still very much like what we've been in the last couple of days. We are range bound within this box, and we can look at this in the context of 4 hourly. So we're in this box. A couple of days I said, look, if we break out from here, 23 to 25, break down from here, probably into the low 19s. Same deal as today. There's no difference today than it was yesterday or the day before. In fact, the day I said it, I know a lot of people look at the thumbnails. You want to take your sock off? All right, can you leave? All right, can you leave your sock on just for a minute while I finish this? Anyway. So I remember saying that about on the clickbait title about 25,000, which is not clickbait for no reason. That's what a target would suggest, as that video specified. We came up to the top, rejection, back into the box, came to the bottom, support, back into the box, and now we're still floating around within the range that we've been stuck in for about 3 days now. No big deal. It is a range. The longer we stay in this range, the more likely it is that it's an accumulation at this high level. We've got this same old read on the RSI as we did when we got rejected from the top of the zone. Rejection here, support on here, rejection. Look, the closer we get down to this central zone, the reset zone, this 50 zone, the more likely it is to actually find a range break for momentum and actually burst through and move up into, towards 23 to maybe 25 as a top target. It's all very realistic. If you look at this chart, it's very much a bullish chart. Golden crossed way back when, completely sailed all the way up to the top of this, into this range from that point forward. And we just take it back to a daily, and we just have a look at how we have reset from here. So there is a decent reset. We're still hanging around quite overheated, but I mean, this is nothing for crypto to stay in the 80s to 90s for a money flow index. And again, this is just a daily. So if we were to pull back, it's still no big deal. It's just a reset. Same thing taking place for the RSI and the MACD. So I'm not concerned about any of this. Obviously, the main thing to focus on would be in the central part of this box, or the upper two-thirds of this box, which is the 200 exponential moving average on the daily. and that's sitting around 21,200. So a break from there, or holding above that level, closing above that level on a daily, and then showing a support take place on there on a daily, would probably spark the next level of continuation, which is marked off not only by the 200 exponential and the simple moving average on a weekly, but a measured move. And the measured move would be from this portion of this descending triangle, which we've already broken out from. And if you want to be, I suppose, if you want to take the actual measurement of it, you would measure it from the mouth and the breakout, which actually sparks a continuation move all the way up to potentially 27,500. Now that is clickbait, which I am going to avoid, because people don't watch videos. They look at thumbnails and then they vomit. They vomit all over the place. I am not that bullish, although that is a measured move that is not impossible to achieve based on what this chart would suggest. But me personally, I'm a moving average guy. You know, moving averages for me work better than trend lines for the most part, and better than fibs as far as I'm concerned. Trend lines and fibs are good and great, and you can apply those to your charts. But for me, it's all about the moving averages, which is why I find it difficult to say when people ask me, what's your target? A target today will be a different target tomorrow, and so on, because the targets float around the charts. They move all over the place. It's just my preference, all right? And you can see the relevance of these moving averages, especially this 200 exponential, failing to close above there for all of this week since we got up to this level. So no big deal. It is what it is. So again, you know, floating around in this area it's just the same as it has been for the last few days. The longer we stay in this area, in my opinion, the more likely it is that we break out from this area. And looking at the S&P, I am in favor of this getting a support very soon. So people who are extremely bearish on this, it's fine to be bearish and to have taken profit at this area, to which I did, and to which I've been saying, and we got the everything bounce 2.0 from the bottom over here to the top over here. So again, you know, successful trades based on formations, trend lines, but there's a difference coming. There is a difference to it. Like I said, I believe that this is the bottom for the S&P, or at least the bottom for a short little while now, maybe for the rest of this quarter into next quarter, until we see a major rally on the dollar. But for the moment, the dollar doesn't look like it wants to put in a major rally. It might be putting in a bottom. We've already hit this area of significance, just ever so slightly front run this area of significance by, I would say, maybe a 0.3, but it's really nothing. We can stay down at these levels and we can get rejected from any one of these levels. I'm not looking for the major run on the dollar now. I think the strength of the euro is undeniable. I was looking for a pullback on this one for a little while, and it survived so much FUD that it's just continued on. And so now I strongly feel as though we are going to move on to a new high for, I say a new high, a relatively new high for the euro. Maybe we do get up above 110, and if that's the case, that's going to be good for every other asset, because it corresponds to dollar weakness and Dixie downside. So it is what it is, but we'll monitor it day by day. Any sort of significant rejection or a short signal, which is not going to be found on these charts at the moment, we'll take seriously, because I would still like to see a pull back into these moving averages, the 106 for the euro, and on the 4 hourly, and about, it's probably a bit higher than that now, actually, isn't it? On the 104.6 and 105. So there's a lot of support for bullish continuation of this euro. So let it be. But for Bitcoin and crypto, sitting around these zones is fine. I still think that we remain within this zone, but closures on more or less any time frame, I would say, because this isn't based on moving averages, of 20,500 or lower, will probably have continuation to the down, as said on the last 3 videos, and closures above 21,500 on a 4 hourly or higher, likely to have continuation into the 23 to 25s, as said in the last 3 videos. So it is what it is. Anyway, I'm going to leave it with you there. I am doing a live stream tonight for Patreon members. It's £7.50 a month, 2 live streams a week. Feel free to join that. Links in the description below, as is the Telegram and the Discord. And other than that, if you could like the video at this point and leave a comment, I'd be very grateful. And I'll leave it with you there. Thank you for watching. Hope you have a nice day. Take it easy.